Hello and welcome to Dave Take Finance. In today's video, we would be learning about cash management. This is one of the most important topic for any management exams, and you would get to know how important it is for any business to maintain an optimum level of cash balance. So we would start with understanding the meaning of cash management. Later on, we will move forward to objectives, functions, and tools for cash management. So if you like the video, do hit the like button and do not forget to subscribe to the channel. For more videos related to management, finance, banking, you can find all those videos over here. You can also check the description box. There is link to various playlists where you can find any video related to your interest. So now let's start with this one. Starting with the meaning of cash management, we can easily divide it in two simpler words, that is cash and management. So first one is cash. Now when we talk about cash in business, it is not just coins and notes. It contains other cash related instruments which can be readily available to get converted into cash. So it can be current account, saving account, the deposits that are maintained in bank. It can be liquid assets which are also referred as money market instruments like treasury bills, like commercial paper, certificate of deposits, etc. It can be checks. So in any form, those liquid assets or bank deposits or currency, all those are treated as cash in business. And when we talk about management, we know that management means planning, organizing, efficiently allocating and then reviewing. So in terms of cash management, when this whole management functions like what we talked about, planning, organizing, efficiently allocating and then reviewing the whole cash balance situation in any business, that is referred as cash management. If you want a simpler definition, you can call it as optimum utilization of cash to ensure liquidity and profitability of business. Liquidity means that you are maintaining enough cash balance to meet the transactional needs. Also, you have to maintain the profitability, and we will see how cash management also deals with the profitability of business. It is thus concerned with collection, disbursement and investment of cash in efficient manner. So when we are talking about cash, there is different aspects to cash. First, we need to collect the cash from our debtors, account receivables. We need to disburse the cash in forms of salary, wages to creditors, and then we need to invest the cash in short-term securities, so that we do not miss on any business opportunity and can aim for maximum profitability of business. So this is what whole idea of cash management is. And now let's see motives for holding cash. So you would get this question as an important one. What are few motives why any business hold on to cash? So first is transaction motive. Now, transaction motive means cash is required in any business to meet operational expenses. Okay, these expenses could be like paying your bills related to rent, electricity, it can be payment of salaries, wages, it can be various other expenses related to transportations, repair and maintenance, accounting expenses. So these are all operational expenses which we also refer as transactional expenses in any business. And the transaction needs of cash can be anticipated. So we can anticipate that what bills need to be paid next month, how much amount should go in salary and wages from, what could be the repairs and maintenance, what accounting expenses, that could be anticipated, it can be calculated. So transaction motive of holding cash, we can determine what would be the optimum amount of cash balance to meet this transactional expenses. Now, second is precautionary motive. Other than meeting all the transactions, we know that the first motive is to meet all the transactional expenses. Second is precautionary. So, any time it can happen that certain unexpected situations comes in the business, and if that particular moment we are running short of cash, we can miss out on certain business opportunities. So, cash is also required to maintain as provision to meet unexpected contingencies in shorter period of time. So anytime anything unexpected happen, there should be cash available as precautionary motive to meet the demands. Maybe certainly demand of consumers would rise and you're not having enough cash to meet the purchase of raw materials or meet other requirements. So there should always be certain precautionary motive cash so that you don't miss on business opportunities and to deal with any kind of unexpected situations. Now, third is speculative motive. Cash should also be kept to grab profitable opportunities of investment or profit booking as and when the prices are low or favorable. So, cash what is kept as precautionary motive can also be used as speculative motive. Now, these cash may be invested in short-term securities because we know that if the cash would be remaining idle, it would be of no use and we are losing on the interest that can be earned on it. So why not invest in certain short-term securities which would provide liquidity also, like it would be readily to be converted in cash in shorter period of time, and also we would earn certain interest percentage for the business. So cash may be invested in short-term securities as to grab the opportunities of investment. Now, many a times it also happens that the prices of shares may be very low at times, and that becomes an opportunity for business to invest the cash and expect the prices to go high and then get certain interest percent, certain rate of returns on it. So this is what we call profit booking. When the market is low, invest the extra cash which is there in the business. Also, you should invest these in short-term securities so that liquidity would be maintained and you are not blocking your money. And other than that, you are not missing out on any opportunities. So maybe, for example, the prices of raw materials suddenly fall and you want to collect a higher amount of raw material at that particular period of time because the prices are quite low. So you can increase your profit margin. So in that case, these what we call as cash keeping for speculative motive or precautionary motive comes into effect, and that is very important. When we are dealing in business, we are aiming for maximum profitization of business. Now let's talk about objectives of cash management. So till now we understand about the motives, why do we hold cash. So the same manner we can see these objectives also. First is optimum cash balance. Now optimum cash balance means it should not be in excess, there should not be shortage. So we are anticipating, we are calculating, we would be making cash budgets and cash flow statements to see what would be the requirement of cash next year or in our business next financial year, and then deciding what would be the optimum cash balance. Other than that, keeping from precautionary and speculative motive as well. So we need to decide on the optimum cash balance. Second is prompt collection from debtor. So cash management also means we are able to collect the amount that we have given to our debtors on time. So we are not losing. If we have given time like by after 3 months, we would be collecting this amount for the sale which we have made. Now, if we are not able to collect it within 3 months, it would disturb the whole business cycle because again, business have to pay to creditors as well. So by collecting from debtors, those money can be also used to pay to the creditors. Now, if anywhere the cycle stops, it disturbs and it forms a blockage. So cash management also deals with prompt collection from debtors, which requires maintaining receivables account and continuously reminding the debtors that they have to make the payment, otherwise penalties could be charged and these things. So prompt collection from debtor is also important objective of cash management. Other than that, investment of excess cash to earn profitability, we already talked about it. Controlling cash inflow and outflow is again the main function, and this is why cash flow statements are prepared, where we will see how cash flows are segregated into 3 types of activities: operating, investing and financing activities, and then we try to calculate what was the total cash inflow and what was the total cash outflow. It is also like your income and expenses. So when we are talking the income and expenses in terms of cash, So that would be cash inflow and cash outflow. Meeting payment schedule. So as I mentioned that also businesses have to make payments to the creditors and payments to the employees, payments in form of salary, wages. So all these things is important, and meeting payment schedule thus becomes an important part of cash management. Now let's talk about functions of cash management. So till now we got an idea about what all are the functions of cash management. So it is dealing with debtors, accounts receivables, which is referred as receivables management. Inventory is also a part of cash which can be readily converted into cash. So we need to make sure that our inventory is converted into finished goods. Those finished goods are sold in the market, and by selling we are again getting back the cash into the business. So it is also a function of inventory management. Then payables management. So from creditors, if we have taken on credit the supplies, we need to make the payments. So payables management again is a function of cash management. Short-term investments we talked about. Forecast and planning is again an important part because we are talking about management activities. So forecast and planning to estimate the cash inflows, outflows, and to estimate the optimum cash balance. Now let's talk about tools for cash control. So what all tools are used? First one is cash budget. Cash budget is prepared to estimate the cash inflows and outflows during a specific period of time in future. So it's very important to be calculating these what would be happening in the future period of time, so that we can expect how much cash should be there in the business, and thus it becomes important to prepare a cash budget where we would be estimating the cash inflows and outflows in coming period of time. Second is cash flow statement. I already mentioned it that cash flow statement is one of those financial statement which would summarize the income and expenses in terms of cash. So when we talk about cash, we talk about cash inflows and outflows. Now here we would be categorizing into three major activities: operating, investing, and financing, which means cash flow from operating activities, cash flow from investing, and cash flow from financing activities. Now, when we talk about operational activities, it could be cash from sale receipt, it could be payment like rent payment, utilities payment, income tax payment, interest payment, salary and wages payment. So all those would be operational activities, and all those would be considered as cash flow from operational activities. We can see if it is positive or negative. So that is how it is calculated. Cash flow from investing activities would include purchase and sale of machinery or fixed assets, then payment related to merger and acquisitions. Cash related to financing activities could be like whenever bond or share is issued, short-term debt instruments is issued by the company, any dividend payment is done by the company. So those all are financing activities. Then there is third tool, that is ratio analysis. We know that there is one ratio called liquidity ratio where we try to analyze the liquidity position of the company. So example is like current ratio, quick ratio, cash ratio. These all helps in measuring the financial strength of the company in terms of cash and cash related instruments, whether the business is able to pay off the short-term obligations or not. So current ratio is like we try to analyze current assets as compared to current liabilities. So current assets would include cash, inventories, and all. Current liabilities would include the payments that has to be made to the creditors. So this is how we try to analyze the liquidity position of the company. Here we try to analyze the cash flows from different activities, and here we try to prepare a budget for a specific period of time to determine what would be the optimum cash balance to be kept for the next financial year. So these are the three tools for the cash control, and this is how the whole system of cash management works. Thank you for watching. Subscribe to my YouTube channel, and do subscribe because I would be uploading more videos related to management topics, related to banking, related to finance. And you can always put comment in the comments section if you want any particular topic to be discussed in the video. Thank you so much.